So yeah, we'll jump into the headlines as we head into today's European trading. You can see Asian shares subdued, yen shunned as euro shines. I wouldn't be so sure about euro shining, but well, I mean, Japan has hinted at intervention to prevent further losses again overnight, which is something we have been talking about, or I certainly have been talking about in recent days. And you can see again Japan to take appropriate steps if weak yen turns excessive. Right, 145 is normally the line in the sand for the Bank of Japan, certainly over the last year. At 150 as well, which obviously is a little bit further ahead, is obviously a level that they will be keeping an eye on as well. Obviously, that economy remains largely export driven, and the lower the price of a currency, the more people from other countries globally can purchase from them. You see a lot of stuff kind of made in Japan. You know, a lot of kind of tech equipment and stuff will be made in Japan. And if the price of the yen is cheap, well, other countries can buy lots or can buy more for the same price of their own currency from Japan. But obviously, if that yen gets too weak for the Japanese, well, then that proves an issue, and they don't make as much profit as they would. So it gets to a point where if a currency is too weak, it's actually negative for an economy. But an export-driven economy, a weak currency is not exactly a bad thing, as they can sell more. It's just seen as things being on a discount in that country. But obviously, if things are discounted too much, I think if a shop's selling something 50% off, well, obviously they're going to lose a bit of their profits on it. But the fact that they can sell a lot more means they may generate more profits. But if it's 75% off or 80% off, to draw an equivalent to a shop, we'll say, well, then they're obviously going to lose a lot of profit margin, where it probably becomes pointless to sell it that cheap. So that's the kind of situation that the Bank of Japan are in, and we'll be monitoring. And that 145, 150 level will be interesting to look at. But apart from that, you flick across the rest of the headlines. Australian dollar hits 3-week low. Yields fall after sharp slowdown in inflation. Right, the Australian dollar slid to a 3-week trough, and yields eased on Wednesday after a sharp slowdown in a monthly reading of inflation added to the case for a rate pause next week, while the Kiwi was also dragged lower. So the Kiwi being dragged lower with the Australian dollar. But there was a monthly CPI figure out of Australia overnight, which we'll get on to now in a minute, which did miss expectations, and that is a reason for some downside in the Australian dollar. Inflation figures in Australia are a quarterly figure. They do have a medium impact inflation figure, but because of the current situation, that medium impact figure becomes high impact, and that is a reason for Australian dollar downside. But apart from that, really, it's talking about the yen and the Australian dollar overnight. Apart from that, there's not really a great deal left. A bit about the PBOC, the People's Bank of China. Dealers had thought the firm of fix on Tuesday meant Beijing was signaling it wanted the yuan's fall to slow or even stop. Now, not so much. Kind of more of an opinionated piece rather than the central bank actually doing anything to help. So main focus of attention this morning is the Bank of Japan and Australian inflation. Right, we'll come across to the grid, and you can see Australian dollar, Kiwi dollar weakness. You see Japanese yen strength, which is obviously an expectation for some potential intervention from the Bank of Japan. You can see US dollar strength across the board. Yields are slightly mixed, as you can see across here. You can see US equity futures lower, European equity futures higher. So I wouldn't read too much into direction across the equity markets overnight. And I have to wait till the Europeans kick in for trading, and then we'll get more of an indication as to what way these equity markets may move over the course of today. But we've seen a lot over the last week or two of downside in the European session and then upside in the US session, which is exactly what we saw into the close yesterday as well. But we'll come across to that now in a minute. But yeah, Australian US dollar strength, Australian dollar, Kiwi dollar weakness, plus Japanese yen strength would indicate a bit of risk off trading in the overnight session, which would be equity markets lower, commodities lower, which is not really what we're seeing. Oil is up, gold and silver down, albeit not much. Copper pretty flat. You can see US equity futures down, European equity futures up, which is not really a situation you would expect to see if markets are moving healthily in line with each other. So markets a little bit discombobulated today, which they have been for a couple of weeks now, so I'm not going to read too much into that and take too much direction from that form of analysis. We can see here this monthly CPI print previous 6.8%, consensus 6.1, actual 5.6. So a good healthy drop in inflation from Australia on I say Wednesday morning, obviously this morning. So consumer confidence figures from Germany slightly lower, as you can see here, which doesn't really go in line with the hawkish commentary from the ECB. So I wouldn't read too much into that. I'd probably listen more to Christine Lagarde, who also speaks again at 4 o'clock today. But we do have Jerome Powell today at 2:30. We do also have Christine Lagarde at 2:30. So 2:30 and 4 for Christine Lagarde, but Jerome Powell. Christine Lagarde had her chance to speak yesterday. Or chose to speak yesterday about the state of monetary policy in the Eurozone. I think that Jerome Powell speech at 2:30 will be something we need to pay attention to. You'd have to imagine he reiterates his hawkish stance, and it's saying that inflation is too high. They're going to continue hiking interest rates, haven't quite decided on an end date in terms of interest rate hikes. And you'd have to imagine he comes in and gives a bit of a hawkish speech. I can't imagine anything different from him over the course of today. But you can see Australian dollar lower, Kiwi dollar lower. Apart from that, you're pretty choppy across the board. You can see euro, sterling choppy. You can see dollar Swiss, dollar yen choppy. Canadian dollar, bit of Canadian dollar weakness off the back of that inflation print yesterday from Canada, which is not to be unexpected. That is probably to be expected. So Canadian dollar weakness. Kiwi dollar, Aussie dollar, not enjoying their CPI prints over the course of the last 24 hours. Dollar index slightly choppy. That's obviously due to euro dollar being slightly choppy as well. You can see this S&P 500 chart, which we were alluding to off the support level. And we were speaking about getting long above this 43.50 resistance level, above this trend line. And obviously that did come to fruition yesterday, which was a nice move if anybody managed to catch it. You got the Dow Jones, Nasdaq, the Russell all higher. You got the DAX grinding higher, kind of breaking a retest at this level overnight, which is nice. But does that continue on into today's European session? It certainly does not move as higher with or at the same sort of aggression that the US indices moved at. So we'll keep an eye on that. FTSE choppy, not really offering us much direction. The Nikkei has snapped its losing streak and has pointed or printed higher over the course of today's Asian session. But yeah, not clear cut direction across the board in equities, but certainly those US equity futures higher over the course of yesterday. Yields remain sideways, oil remains sideways, gold remains sideways, although it did move lower through that descending triangle break that we were speaking about yesterday. Hopefully somebody managed to jump on board with that. But this Australian dollar, Kiwi dollar, or Aussie yen, CAD yen, sorry, weakness obviously goes in line with that Aussie and Kiwi move lower. So all asset classes not moving, but we do see Australian dollar weakness, Kiwi dollar weakness, bit of US dollar strength as we head into today's trade, and also some positivity from the handover from the US session as we head into today's European session.